Hey traders, it's Leaf West. I'm talking about in this video yellow candles, and much like the all the color-coded candles that the Leaf West trend tracking software sort of paints, it has to be taken in context of the pattern, the price pattern that is being exhibited by the stock you're looking at, and that's seen no more, no less in the painting of yellow candles. And again, yellow candles is when the trend strength of the up and down action of the price is gotten into a basically a contraction period where again price moves in waves and waves of both expansions and contractions. And so ideally, if you can catch price in a contraction period, an obvious contraction period, you could benefit from any expansion that comes after that, because really, the expanding price creates the gains and the losses that traders have. It's tough to make money when a stock is flat, but it's the move out of those contraction periods that give us the intraday trading opportunities. And so, for example, and how that relates to the pattern of prices, and you have to look at the examples here. We had a gap higher. This is from January 18th on Apple. We had a gap higher and give us extreme measures in price and actually extreme measures in trend. And then you had a sideways consolidation, contraction. You can see lower highs, higher lows, and in fact, you got the squeeze indicator showing you that price has been squeezed, and now you have the yellow candles which show you the trend is being squeezed. And in conjunction with this new structure high, extreme price, extreme trend, and then a consolidation afterwards, this is the perfect spot to use yellow candles. Here you would expect the trend to continue that was in place before the pattern was formed, and yellow candles are really your way to quickly identify that the end of this pattern is coming. It's coming, relatively quickly. So you can get long either on the break of traditional trend lines that you can draw on a pattern, or on a flip to green. And so yellow candles in less obvious spots, like here was a very obvious spot in a pattern, a contraction pattern, and in this case, it's less obvious than this pattern. But really, if you look at it, what it is a sideways sort of contraction, right? You had an expansion up out of this pattern, and then you had price chopping sideways. So, in theory, if you saw this, you should sort of say that we are in a sideways rectangle consolidation period. And all this really should have done is raised your attention to this area and said, okay, well, when price breaks out of this rectangle, that is, you're probably going to see another period of expansion. And sure enough, that's what you did when you broke through this. Again, when you break through, you're often will pull back and retest, and often you'll get that on triangles. Pennants not so much, because pennants are smaller. They're more they're more bullish. Triangles are more bigger patterns. Pennants are quicker, so you get less retests. I think on pennants, intraday pennants. On rectangles here, you got just some hesitancy breaking the pattern. Once you broke it, you moved up quickly. Roughly $1, relatively quickly. Pulled back, and away you went. All right, let me get some more examples, guys. Hang on. Okay, sticking with Apple on a 3-minute chart. This is from back on January 12th, and if you were to go to well, you can see that price moved down, and then it was kind of making a weak ass attempt, chopping sideways, kind of upward in a corrective looking pattern. And you had all these sort of single yellow candles coming through. And really, what you want, again, you want a recognizable pattern, and you want to see a cluster of yellow candles. For example, here you got four sort of dojis in a row, showing you that trend is consolidating. You don't have price being contracting here as well. You had price more contracting here. So can you see a pattern here? It's tough to see a pattern here. So again, let's go back to right here. You got price contracting. You can say this in this example. I can see that price broke up, tested the top part, and then pulled back. You know, you could sort of see that there. Again, it's pretty small price range. It's not as nice as the earlier example that we had on Apple, but you can sort of see it there. But here, to me, it looks more, well, is it going sideways there? It's still kind of a that kind of pattern, right? And yeah, but you had the expansion coming out of this actually was a break downward. Um, but if you were to look at this, there's no way I think that you should take a short on this trade. This looks like just a fake out because you're actually making higher highs here, and then you're pulling back and getting contractions. So you would expect price to go higher. Um, so this is probably where you would have gotten long here, and just considered this because it's a smaller time frame as a fake out. But then what happens here? Okay, so here you have price going down, and yeah, price making a corrective sort of A, B, C after making a new structure high, and then making sort of a weak bounce. And this is right at the end of the day, so it's tough to read much into that. But let's see on Apple if there's any more quite handy here. Okay. Here's an example. So here's you got a nice big cluster. You got a cluster of yellow candles. You got a squeeze indicator indicating as well. So what do we have here? We have price doing a lot of bigger chopping, but you've uh, again you had price gapping higher and then chopping sideways, right? But you've made a lower high, and you're making a real contraction if you're looking at this. This is a perfect example of what you really can get action off of these yellow candles, right? And just without going to a bigger time chart here, this is not a bullish setup, right? Like you aren't making new highs and then contracting. What you're doing is you made a low here, a low push, basically a failed attempt to move higher, and now you're consolidating in this contraction pattern and giving contraction in price, contraction in trend, and now when you break below, this is probably as good a sign to get short as any, um, uh, using again the contraction candles. And then here you get price extremes, so that tells you probably to watch for the break of the moving average to take profits on your short. So it wasn't a big trade, but it was a couple dollars there. So if you got short here in this move lower, it's around 424, and then you covered somewhere in here at 422, so $2, and you made basically you're bouncing off prior support. Okay, let me find another example. Hang on. Okay, I thought I'd go to a bigger time frame. This is a 10-minute chart on Sears Holding. I actually blogged about this coming out of the Martin Luther King Jr. holiday long weekend. Right here at this point, we showed some bullish action in the chart. Look at the pushes higher. We're made a new structure high here, barely, but it's the pattern afterwards that is the most interesting thing. Is that you aren't pulling back at ABC. What you're doing is you're making some kind of triangle, pennant, whatever you want to call it. And my blog about this was that I wasn't sure whether we were going to pull back further into, like this pullback here was further into the slot area, looking at the prior move. But at the point I drew the chart, I said we could either break higher here because of the contraction, or we could pull back and then break higher. But I was pretty sure that this was a continuation, just a correction sort of look to price. And if you were, I was doing some other stuff on Tuesday morning, so I did not take advantage of this because it was a heck of a ride. I think I was projecting to $36, $37 for this bounce, and we'll just walk through that. But on the bigger time frames, these candles are more important because there's less random noise that you get in an intraday chart. So you're getting on a 10-minute chart. We had about 6 candles here, so you get about an hour of really tight squeezing of trend here. Um, I don't have a 60-minute squeeze indicator up here, but suffice to say that was a juicy setup, and sure enough, bang, we had a quick move, kickoff move warning by these candles, and in this case, if you'd been on top of it, you could have. It would have been nice to have a partial position at least on the kickoff, and then you had a very similar kind of look to the pullback. We didn't get yellow candles, um, and we had another kickoff. This time we really didn't overshoot as much, but look at the again another early day push and then a late day consolidation. We get our contraction pattern here again, and then boom, another big move. Another, it's like these flags, right? You get here's your flagpole, and then here's your flag. Um, Again, it didn't get a yellow pattern, but it's very similar to how. And now I would say that this looks a little bit different. Everything else was kind of straight sideways, you know, bullish sort of look to the consolidation. Now I would say that this looks a little bit, you get an extreme candle measures, you've made a lower low and a lower high. So this might be something of a reversal here. But I'm not sure if you can borrow Sears Holding. It's a tightly shorted stock or highly shorted stock, so it'd be a dangerous one to do that. Let me just try and find another example of a daily chart, maybe on a yellow candle. Hang on. Actually, I'll go through Freeport Macmoran FCX on the 10-minute chart and just show you some of the recent yellow candles that I saw in this one. Here we had, again, if you're looking at towards the end of 2011, I was talking about how cyclicals could have been a good candidate for bounces, and sure enough, they were. And we had extreme candles here on Freeport, and we had a bit of a inverted head and shoulders. Here's the head, here's your left shoulder, here's your right shoulder, and you had these yellow candles here. So again, it all comes down to recognizing patterns, right? And you could have said, here's your neckline for your inverted head and shoulder, and then you have this nice contraction trend candles in yellow, showing you that that was your pattern play. That was your break. So then you had a bust higher. You had a kickoff signal candles in the extreme price move, and then you had nice sort of sideways action again, consolidation pattern, right? Again, all you do is you just draw your trend line on a sort of rudimentary basis, and again, you could say that was your pattern, right? And then here was your yellow candles at the end of the day. And so obviously the risk reward was positive here to play this kind of setup going into the next day. And sure enough, we had a gap higher, extreme candles, waiting for a pullback or some kind of pattern out of this. And what do you get? You really don't get anything. You get, at most, you get a pattern right there. It looks like I was measuring this pullback. I can't remember if I traded this. I think I did trade a continuation pattern here. Anyways, take this off, and we'll see I think there's some more yellow ones. Okay, so here you had, now you had a strong move, right? And you've got trend as price. They had this extreme, so they go kind of hand in hand, right? So we had price keep going higher and higher and higher, and we had trend strength getting weaker and weaker and weaker. So it's when you get price going this way and trend strength getting weaker, you're going to see, when you get yellow candles, you're going to see a counter trend move off of the break of those candles, right? And so you could sort of see that we had a bit of a, I don't know, you could call it a ending diagonal maybe, right? You had some kind of rise, and that could be a rising pattern, I don't know. But anyways, you did have that as being your extreme warning, and that you're going to break a bit lower.